Welcome once again to the second part of this risk management series. And on this one, we are going to continue from where we stopped the last time. The last time we talked about setting your stop loss, calculating your stop loss, and also risk to reward and all of that. So in continuation of that, we are going to look into other aspects of risk management application, right? So this one here, we are going to talk about position sizing, how to size your position and allocating your risk per trade. So this is the major 2 points we are going to address on this session, and then we're going to continue from there, the next and the final session. So the first point here is position sizing. So position sizing is what you need to know or how to set the right position for your account size. So every trader trade different account sizes, so you cannot set a random lot sizes or position size on every trade. You need to be very specific and intentional on every position sizes that you set for your trades. This is very important part of risk management. So to make it very simple for you, there are a lot of position size or lot size calculators on the internet. So I'm going to use this one here by my FX book. And you can use it to set your positions for your trades. So you may go on my FX book and you will find this position size calculator. You can use it to set to calculate your positions. So it makes it very easy for you. So in this case, we are going to do how to calculate the right lot sizes for your trades. It is very important to calculate the right lot size to use for each trade. So for example, in this case, we have EU for the markets we are trading, and the currency is USD, always should be USD unless you have a different currency you are trading. The different currency of your accounts, of your trading account, right? So if your trading account is in USD, you need to have USD always there. So your account size, so let's say, for example, your account size, you are trading a 10,000 USD account. So if this is your account size, the risk ratio, so what ratio do you want to use on your account? So it is always advisable to use something between 1 to 3% per trade. 1 to 3% per trade. But in an extreme situation, you should not go beyond 5% per trade, right? The right way to apply risk management, it is advisable to use anywhere between 1 to 3% per trade. So you may have a risk ratio of 1% to 3% maximum. So in this case, I'm going to use 2% per trade. So on a 2% per trade, this simply means I need to lose about 50 trades in a row to grow my account. So if my risk ratio in this case is 2% per trade, so on a $10,000 account, 2% of 10,000, if we can calculate that real quick. So 1% is about 100, so 2% should be about 2%. Okay, hold on, let me quickly calculate that to be sure. Okay, yes, so 2% should be 200 USD. So which means on the 10,000, 2% of 10,000 is definitely 200 USD. So with that, you are able to get about 50 trades. So for you to blow this $10,000 account, you need to lose 50 trades in a row. This is impossible, like literally impossible for you to lose 50 trades continuously, like in a row. It is impossible to blow this account, right? So it is always advisable to use between 1% to 3% maximum, right? And in an extreme situation whereby you want to go big, you should not go beyond 5% per trade, which is still very good one as well. So the stop loss we want to use in this case, we want to use 30 pips stop loss. I told you stop loss should not exceed 40 pips. So it might be 20 pips, 25 pips, 30 pips, 35 pips, or 40 pips maximum. So I want to use 30 pips stop loss in this case, right? So when I am going to type in 30 pips right there, and then this should be 1 always. This has to do with the units. So if you have it, it should be 1 always. And then you click on calculate. So in this case, my lot sizing for a good risk management should be 0.67. So with 0.67 lot size on each trade, I can use 0.67. And my stop loss in USD is $200. And in pips is 30 pips. So trading Euro USD, my lot size should be 0.67, which means when I come on the MT4, I'm gonna go to EU. Where is my EU? So if I'm trading EU, so on EU, my lot size here should be 0.67. So this should be my lot size. So if I'm gonna buy or sell, this should be my lot size on EU, right? So if I had a 10,000 USD account, my lot size for this trade is 0.67. And my stop loss on that trade would be 30 pips. So in this example, let's assume I'm looking for buy right there. I'm gonna buy from this level, and I have 0.67, which is my lot size. My stop loss in this case would be 30 pips. So I'm gonna count 30 pips below, right? So 30 pips below this would be my stop loss, and that would be about 200 USD, right? So 200 USD, I told you my TP has to be twice of that. So my TP should be somewhere around 400 USD or more. So my TP in this case, my good TP here will be somewhere around here, about 70 pips. So if I risk 30 pips to make 70 pips or 60 pips, that is a very good trade. I have good risk to reward. So this is a very easy way to calculate your position size. To know the right position size you need to use. So if you're looking to do 2% per trade, all you need to do is put 2% right there. So this stands for 2% per trade, right? You are going to risk 200 USD on this trade. And if you win 400 USD or more. So that is 2 to 1. And there are cases whereby you have 3 to 1 in this case. So if you have 3 to 1, which means your stop loss is 200 USD, your TP is about 600 USD. So you make even more money from that little risk you have there. So depends on your account size. If you have 1,000 account size, if your account size is 1,000, the same thing, the same process. You put in 1,000 right there. You put in your percentage. If you want to risk 5%, you do the same thing. You put it right there, and your pips amount, you put it right there, and then you click on calculate. So if I'm going to use 1,000 USD account, and I want to use 30 pips stop loss with a 2% risk per trade, I'll be using 0.07. My lot size for that trade will be 0.07. My stop loss is 20 USD, which is 2%. And my TP will be about 4%, right? 40 USD or more. That is 4% growth on that one trade, which is very good. When you look at the big firms, the big guys who have the big cash in the financial markets, in a month, they are simply looking to do about 10% to 15% returns in a month, right? Sometimes in a whole year, you have just 10%, 12%, those big guys, big tech firms who are into trading, they're looking to do just 10% to 50% in a full year. So if you're able to do 4% in one single trade in a day, that is really great. So this is the simple way to calculate your lot sizes. If you do not know the lot sizes to use, you can get on this lot size calculator, or you use any other one. There are several of these programs online for free. You can use them to calculate your lot sizes and use that to set the proper lot size you should be trading on your account's size. So your maximum risk ratio should not exceed 5%. if I'm going to use 5% in this case, okay, let's try with 5%. So with 5% here, which means on every trade, I'm losing to risk 50 USD. So this means on every single trade, I'm looking to risk 50 USD per trade. And if I win this trade, I'm going to make 100 USD or more. 100 USD or more, right? So that is 2 to 1. Sometimes you may have 3 to 1 setups. So in that case, I'm looking to make 150 USD or more. And my risk in that trade is just 50 USD. And the right lot size to use is right here, 0.14. This is the lot size I'm going to use for such trades. So when you go on your MT4, you simply type in 0.17 right there. That is the lot size you're going to use for this setup, 0.17. This is how easy it is to know the lot sizes you should be trading on your account size. Very simple and straight to the point. So it is very also important to implement your risk in terms of percentages, in terms of ratios. It is very important. You can see percentages. It is very important because it makes it very easy for you to understand how long or how much losing trade is going to take for you to blow your account. And in this case, like I've always said, it should be impossible for you to blow your account. Make it very difficult for the market to wipe out your account, right? And risk management is your best way of ensuring it becomes really difficult for the market to wipe out your account. So apply these things and be sure to use the right position sizes when you are trading. So that will be everything on this one, on this very quick session. I've talked about position sizing and the risk per trade. So I'll see you on the next session and the final session to tie it all together. Peace.